Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Tuesday, April 12th, where we'll briefly discuss the action in the market today and then see how things look for Wednesday, April 13th. And it was another negative day. Started out positive, but then prices fell back and ended up going negative. The big story of the day was the CPI release, which showed inflation being very high, and I'll have a chart to show you here in just a second about that. And initially, the reaction was positive because it didn't seem to be as bad as it was feared to be. But then it's like when they thought about it for a little while longer, prices started to go lower and then eventually turned negative, and we ended up closing down on the day. So right at the open, we did gap higher, and we actually gapped above R1. And at one point, we were up 1.3%. So it looked like it was going to be a pretty positive day. But in fact, all of that gain came right at the beginning. And what we see quite often, especially right at the open, is if we see a big up move, then we see some kind of retracement. Well, that's what happened. It looked like they might be trying to fill the gap from the previous day, but then the selling just kept going from there. It actually, as the day went on, took prices negative, and we ended up going below S1 as the day wore on. There was a little bit of buying going into the close, but when everything was said and done, we ended up closing down 0.34%. Not a big down move, but to see a 1% intraday move where we had been up 1.3% and then we closed down 0.34%, that's pretty negative overall. Volume was below average and declining. So Tuesday's volume was less than Monday's volume. It just shows there's still a lot of indecisiveness about things right now. Our technicals are negative and pretty much across the board, except we might be either at or getting close to a short-term oversold condition. A lot of our short-term indicators are getting pretty far extreme. The big fixation right now, and kind of the main story, at least as it applies to the US and to the stock market, is inflation and interest rates. There are, of course, all the geopolitical concerns, and I'll briefly discuss those here in just a moment. So what are some comments? The technicals are negative. The S&P closed again below the 50-period simple moving average. It closed below that on Monday, but we were able to get above that. But then as the day went on, we just quickly went through that again. And we ended up closing below the 200-day exponential moving average. And again, I'll have a chart to show you that. That's the last of the short to intermediate term charts, because I use the 200 as part of the intermediate term more. We don't really have any other major moving averages that I look at below where we're at right now. And this is attributed to rising interest rates. And as interest rates go up, stocks go down. Well, we saw interest rates actually go down on Tuesday, but that really didn't help stocks overall. And even though we had a down day, the VIX actually declined a little bit. Usually on a down day, the VIX will go up. All of our yield curves that I plot are no longer inverted. And then another thing, which could be seen as more negative, is that the dollar index is currently above 100. We'll have to see, can it stay above 100? It's been doing really well lately. And the stronger dollar can hurt stock prices because companies tend to like a weaker dollar. It makes the conversion process look better. And it just means that the imports and export scenario is more favorable when we have a weaker dollar than when we have a stronger dollar. And we're still seeing no change in sentiment. There's not a lot of fear coming into the market, as witnessed by the VIX. Okay, it actually went down, which means fear decreased. So people aren't really freaking out currently. The CPI was high. It was up well over 8%. I think it was 8.5%, but it was not as high as feared, and at least at first. And then they stepped back and went, wait a minute. There was an initial scenario thinking that maybe we've topped out. Well, how do you know that when you're right in the middle of the story? How do you know if that's the top or not? And so that scenario kind of got replaced by, yeah, we're in a bad inflationary environment, and that ended up taking prices lower. We're still fairly valued according to the current market valuation model. Our trend is still below 20 with the ADX. So we are in a trendless environment. With the down day, we saw our bias is negative, and the last number of days show that our momentum is currently negative. Here's the fear and greed index. It was unchanged. And I had to look here at the bottom just to make sure, gee, did they even update it? Yeah, it's the same reading from what we saw on Monday. So in a real downward environment, we want to see this really get pegged over to the left, and that's just not happening. We're in more neutral territory right now. Then this is just a historical chart showing that we're pretty much in the midpoint these days. This shows that the VIX actually declined on a closing basis. Now, if you look at the bar, it's looking like fear is rising. We're seeing kind of a pattern of higher highs and higher lows. So that is showing a little increase in fear, but on a closing basis, we were actually down. But we want to see this get a lot higher if we're hitting some kind of a bottom, and that's just not happening yet. Here's the CPI. If you look at this orange, the red, yellow line together, that's the number that they came out with, and up over about 8.5%. Well, if you go back to how this was calculated in 1990, according to shadowstats.com, we would be up in the 11, 12 range right now. And if on the next page, if you go back to how things were calculated in the 1980s, we would be up into what, 17, 18%, possibly 16, 17, 18% range, a lot higher than what the official number is right now. And so that's why we're seeing this being the main scenario that's playing out, not only in the stock market, but also for all of us, all these people. We have to buy food, we have to buy gas, and we're seeing a real impact with that. Here's the daily chart where we broke down below the pivot, but we were below the pivot after Monday. And we're really not, unless we hit some of these areas of support down here, there's really not a lot of room to land on until we get down to S1. Now, is that going to happen right away? If it does happen, not necessarily. We might see a little bit of a bounce. We could see a little bit of a recovery. But if we do start to go up, we still have a lot of overhead resistance where we're at right now. And then at the bottom, you can see where volume actually dropped off and is below average at the same time. Here's the ADX, even though it curled just a little bit, it's still negative and below 20. The red line is on top, so we default over to this being a negative trend. Here's our moving average spaghetti tree, which shows that we close below the 200-day exponential moving average, and all of the moving averages on this chart, we are currently below that based on price. Here's our rainbow. These are longer term moving averages, but we're getting now down into the bottom area of these moving averages as well. Then we're below the 200-day moving average in our longer term trend. So that means that's more negative right now. And then here's the dollar. This is a week, let's see, yeah, weekly chart. I look at both a daily and a weekly chart in the full-blown daily video, but we are currently right above 100. Now, if we don't stay there for the week, this will come back down. But we haven't been near the 100 level unless you go back into the beginning of the COVID plunge. I'm not equating the two. I'm just saying that the dollar saw a lot of weakness as we were going through all the lockdowns. It had a double bottom here in late 2020 into 2021 and has since been in a pretty strong uptrend. Then this is the correlation chart that I've been showing. And the closer we get to -1 means that there is a very strong inverse relationship. So as we see interest rates going up, which is the dotted red line, even though they declined a little bit, we see the tech sector really going down right now with a very strong inverse relationship currently. So what's our outlook then for Wednesday? Our technicals are negative. The market remains in that trendless intermediate term range. There's the daily battle between growth and value. Interest rates are a real concern. And then some supply chain issues. One thing I heard about was that they're considering lessening some of the lockdowns in China, which may allow some of their folks to get back to work. But then I've also been hearing some things that they're closing, at least the embassy in Shanghai in China. And I'm not quite sure what that's all about, if that's COVID related or something else is going on there. I'm not really sure about that. So there's different scenarios that are playing out between the US and China, which could affect the supply chain issues that we're having in the US. The big report coming out on Wednesday, we saw the CPI on Tuesday. Well, now we get the PPI, the producer price index, coming out on Wednesday. We still have the Russia-Ukraine situation, which is still really, really bad. I mainly focus on it from how does it affect the economy? How does it affect the stock market? And there really isn't much coming out of that right now. I've already talked about the China and the supply chain issues. Inflation and interest rates continue to be the main narrative right now with the PPI coming out. So what are our different scenarios? If the market is going to keep going down from here, what will make that happen, which seems to be most likely? Rising interest rates. Even though we saw a decline in interest rates on Tuesday, there's still a pretty negative backdrop because our technicals are negative, as well as a continuation of inflation fears. What could make the market go up from here? Well, there is that positive backdrop after yield curves become re-inverted, after they get back to being more normal. That could take some time to play out. It doesn't mean it's going to happen right away, and it may not even happen. But if you look back historically, there is a chance that something like that could happen. On a short-term basis, we are oversold, and the moving averages, not necessarily in the S&P, but in some of the other indexes, we have moving averages and pivot points that may provide some support, like in the Dow, in the Wilshire, in the NYSE, not so much in the NASDAQ. It's having a lot of trouble right now. The current scenario that we're in is number 3, sideways. We're more of a neutral type environment because the ADX is below 20 and it's continuing to decline. It hasn't crossed above that moving average yet. And when we're in that environment, we see a real slowdown in price movement and pretty choppy conditions. And that might go on for a while. We might have 1 or 2 up days that don't really decide anything, or that doesn't really decide anything. And then we might have 1 or 2 down days, and we might just kind of drift for a while. That's always a possibility. And then eventually we will break out of that, but that can go on for a while. So what's our conclusion? Right now, the S&P is negative overall. Short term, we're negative, but likely oversold. Now, it doesn't mean we're just going to bounce from here. As I record this, the futures are up about 0.5%, but this is hours before the open. And then we have the whole day to go through. But there's nothing to say that we can't become even more oversold than where we are right now, at least in the short term. Intermediate term, we're pretty much negative. Our oscillators, if they're not already negative, are very close to crossing over negative. And we're below all the moving averages that I plot, including the 50-period simple moving average and the 200 exponential moving average. And then we're below the 200-day simple moving average in the long term. And the longer we stay below that, the more negative the long-term trend becomes. Then just to give you an idea, these are the videos that I put out. Right now, this is the daily snapshot video, which I just kind of go over things briefly. If you want to look at the full length version, you're welcome to do that. And then every week I do a weekly video. So thank you. Have a really good Wednesday, and I'll prepare the next snapshot video after Wednesday's session.